Hello friends, welcome to the Bank Nifty weekly analysis for the month of May between 8th May to 12th May. That is of the week. So I will share my views how we could have traded Bank Nifty. 8th May Monday, if you look at it, the stop losses are the previous stop loss are below as well as above. There are maximum sellers who are sitting on the top rather than below, except the last half an hour or so the previous day there was a huge selling, but otherwise the liquidity area is on the top. Okay, to support our view, the Bank Nifty started with a gap up with two strong bullish candles. That means the assumption could be it's going to be a strong C side movement. Whenever there is a strong one-way movement, like if you look at the first few candles, you can draw the Fibonacci like this. Remember, when there is a strong upward or downward movement, don't expect retracement on the Fibonacci chart could come up to 50 to 61%. It will not come. It will come up to a small retracement. It will do about 23%, or the big can come between 23.6 to 38.2% area only. That is how whenever there is a strong upside or a downward movement is there. So in the case of Monday, probably you can take the trade somewhere between 929 930, rather maybe after seeing 931 green candle, a strong candle rather comparatively with the previous two candles, or even 925 candle, which signals kind of strong bullish movement. So probably this is where I took the trade at 931 at about the closing of the candle is 43,168, and by 10 o'clock the high of the candle is at 43,316, about 130 140 points. This is where you could exit with a decent profit, or you could have waited for some more gain. But that is how I do a quick trading, and it's a CE call and it worked. Let us go to Tuesday. Tuesday, if you look at it, the previous day stop losses are below on 9th. The 8th, most of the candles are below because there is a gap up opening. Now, if you look at first two candles, actually these will decide. The intraday stop loss is created below here somewhere on the first candle, but if you see the second candle, the stop loss are created here. So there could be a dilemma between CE call or a PE call. Okay, you'll have to wait for some more time, probably till 9:30. See, if you look at carefully, the second candle which created stop loss here has been taken care by these two candles. The movement came here, so it would have hunted all the stop losses created by the second candle, that is on the intraday. That means what is left? The stop losses created by the first candle here below, as well as previous stop losses. That means the strong possibility of coming down is high. That is how you should look at it. So if you draw the Fibonacci like this, you could have traded somewhere at 923, the candle closing is at 43,430, or you could have waited for one more candle for a strong downward movement at 924, where the candle closed at 43,407. Had you taken a trade here, it came up to 43,279. That is about 150 kind of a downward movement. That is how the second day trade of the week could have been done. Now quickly move to the Wednesday. 10th May. Okay, again a gap up opening, previous stop loss are below, and the first candle and second candle with these wicks, it created a stop loss on the top. Okay, so probably people can think no, it will go to C side, but if you look at the first move, itself up to 919, it has taken care of, or rather it has hunted all the stop losses created by the first two candles. Now what is left? Intraday stop losses, whatever little, these are not a big stop losses, whatever little it is created has taken care. So what is left is, there is nothing on top and previous stop loss are below. That means it should come down. So you will draw the Fibo like this. You could have traded somewhere at 923 or 924. If you taken at 924 also, at 43 then 231, it went on. It's rather unlimited kind of, 400 500 points of the day. You could do a trailing of stop loss also as well. Only thing is, I advise, look at this candle at 918 or 917. These two candles are, I call it because I made a mistake here, these are the FOMO candles. These will tempt you to buy a CE call because the psychological number is at 43,500. There is enough space. After seeing this big candle, green candle, this is a kind of a Marubozu kind of a candle, people would get tempted to buy here on a CE call, but they should wait for some time to see the reversal, or they could draw Fibo like this. Okay, now we'll go to the Thursday, 11th May. Look at it, 11th May, it's fairly simple rather. Previous day stop loss are previous day stop loss are below, gap up opening, and look at the first candle. The kind of, this is a proper intraday stop loss which it has created. If you look at first day, first few minutes, I mean on 11th, the moment it looks like it is hunting or coming towards previous day stop losses because it looks like a PE movement. But the kind of wick it has created, a kind of stop loss, is very much sure that at least it should retrace up to this level. Rather, if I had to put 40,607. So whenever a candle opens like this, wait for the reversal for a CE call. So this is how you draw the. I always suggest wait till 9:30. Draw a proper Fibo. So somewhere here you could trade at 931, somewhere 932, which is touching 50 or crossing 50 somewhere here. It gave a huge benefit. Look at how the CE call moved. This is what I gave it to my friends. I don't do any So this is a CE call and it worked well. Our strategy worked till Thursday. Now come to the yesterday, that is 12th May. What could have been? Yes. 12th, if you look at it, the previous day stop losses are here. And one more I always tell, if you look at it, the previous day, the major turning point happened here. Reversal for PE calls or sellers have become active, and this entire zone 43,590 versus 43,500 to 600, this zone is clearly showing a strong selling area. But if you flip it and think in a different way, this is the area where the maximum liquidity is lying here. The possibility of hunting this area, stop loss hunting, is highly likely. That was the assumption I had when I started. Okay. Now, if you look at it, there is a gap down opening on yesterday on 12th May, And if you look at the first candle, if you see the wick, it has created a stop loss below, not on top. So the golden principle in my strategy is, whenever a day opens, it always try to hunt the intraday stop loss first and then go for a previous day. Okay, now if you look at this candle, the chart, you could have drawn a Fibo like this. And if you look at the movement of the first wave, second wave, whatever stop losses created by the first candle, I just remove the chart so that you can see, whatever stop losses created by the first candle, all the stop losses are somewhere would be below around 43,300 to 340 area. All these been taken care in the first few minutes of the trade of the day. So once this is over, the only liquid part or a previous stop loss are somewhere here, and as I had indicated, the major liquid area is this. These are the two things you must remember. So accordingly, somewhere probably the trading above 61%, around 957 at 43 and 461 was this thing. Somewhere anywhere you could take the trade here, which would have given you a strong, with the strong bullish move, you could have made a huge profits. That is how the week. Before I sign off, I would like to tell how I trade. My strategy is always simple. I always look at the first two candles and where the intraday stop loss is being created, because that is where the first hunting area happens. Second is previous day stop losses, where they are lying, the possible move. Third is previous day major supply zone or major liquid area, that is the where the bank nifty tend to move to those areas. These are the three principles I always follow. Please subscribe to my channel if you like this video. Thank you. Have a great weekend. See you on Monday for my daily videos. Thank you.